This episode of From Angel to Exit is brought to you by the CEO's Right Hand. The CEO's Right Hand provides customized outsourced finance, accounting, and human resource services tailored to small and medium-sized businesses. Their services include fractional CFO, HR support, capital raising, and financial infrastructure development. They emphasize personalized engagements and expert support to drive growth and operational efficiencies. If you want to find out more, visit theceosrighthand.co. Now, let's get on with our episode. Are you serious about planning a successful business exit? From Angel to Exit is your go-to resource. Subscribe to our newsletter at eckfeldt.com/podcast for even more valuable insights. And to get personalized guidance, take our free exit readiness assessment. It's just 24 questions, and it will give you a clear picture of your exit readiness. Find the assessment at eckfeldt.com/exit. Submit your results, and we'll schedule a free follow-up call to discuss your specific situation and the best way to maximize your valuation and ensure a successful transaction. Now, back to the episode. Welcome, everyone. This is From Angel to Exit. I'm Bruce Eckfeldt. I'm your host. Our guest today is Suren Kapse. He is an advisor. He's a coach, consultant working with companies on strategy, working with companies on exits. We're going to talk about the world of acquisitions, of exits, and helping both the buy side and the sell side with strategies and figuring out who to buy, how to buy, and some of the things that go into valuation, some of the things that go into making successful deals. It's a complicated process, I think, as a lot of people know, but we want to get into this, give some insights for those founders that are interested in the exit process and really what the options are and what the processes look like and some of the things you need to be aware of and hopefully some things you can do to have better, more successful outcomes. So with all that, Suren, it's a pleasure to have you on. Thank you for being on today.
Thank you, Bruce. Hello, everyone there. Good to be on the call here.
Yeah. So before we dive into this world of exits and mergers and acquisitions, would love to get a little background. I guess professionally, what was your professional background and how did you start getting into the space of mergers and acquisitions?
Sure. So after my engineering and MBA, I got into advertising agency for a year and realized that this is not my cup of tea. So I moved to technology industry, mostly in business development function. I worked in India, studied in India, worked in India for 5 years, and then moved to Europe. I was looking at 5 countries as a territory based out of UK, Germany, France, Netherlands, Switzerland, Belgium. And then after a pretty good stint there, I came to US to set up operations for Fujitsu's one of the consulting arms, and had a pretty good run with them for 5-6 years and moved on, changed my jobs. Fast forward, I worked with Accenture, moved to strategy consulting, mostly acquiring new clients. And then after that, we went back to India to look after APAC role for large, big deals, 60 million plus. Did that for 5-6 years and came back in 2013 to US and worked with a French startup product company because I had enough working with large companies. So I said, I want something new, interesting, which was software product startup.
Yeah.
And it was exciting to work with a French company, very different culture and software products, different industry sort of. And then after my 50th birthday, I said, I am financially okay. Let me do something exciting, interesting, something different than that. I enjoyed corporate executive learning and earning and traveling all over. And I did 6 months of break to introspect, assess as who am I, what I want with the rest of my life. And I came with the criteria that I enjoy interacting with people. What I bring to the table is understanding business from different perspective. And I wanted to help people whom I can. And when I needed help, there wasn't much available those days. So all it put together, I thought, let's become a business coach. And I become certified business coach, executive coach. And my wife, meanwhile, had been intercultural coach for almost 20 years. We both were doing our own boutique shops, and we realized that both of us spending 60-80% time to sell and 20-30% delivering. So not very economical business models. We tried to combine and work, and it worked phenomenally. So we do now 2 things. One is post-merger acquisition, talent integration of the C-suite. And then for smaller companies around 2 to 25, 50 million or so, help them to be prepared to do a successful exit. We work with many startups and small business owners.
Got it.
We
Excellent.
operate in US and India.
Yeah. Um, so a couple of questions. One is, I guess, how do you kind of frame, or what are the different types of exits that you kind of see in the world, and then which ones do you focus on, right? In terms of, I mean, my kind of joke is always, everyone's going to exit their company in some way, right? It might be first, right? But you'll, at some point, you're going to exit. But there's lots of different ways you can exit a company, or that you can, have a transition in a company. How do you kind of structure that world, or kind of help categorize that world a little bit?
Sure. So, I'll answer in two parts. So, the type of exits I would like to see this category is that so people typically buy you when you are in, say, small to medium size. Is they'll either buy you for the skills of your people. This is
Hmm.
more into technology or very unique skills your people you have. And you have say 100 people or even 20 people in say in AI.
Yeah.
Then for any acquiring company, it's going to take a long time to acquire those many people. So this is easy, but so they'll buy either for people. Second, they'll buy for the scale. So you say the skill is not really great, but you have 2,000 people in particular area.
Yeah.
Then
Okay.
at one shot, they are scalable and can serve so many more customers when they're in a business. Third, they'll buy you for the clients you have.
Uh-huh.
So I'm a company, I am in a very specialized business, and there are out of 15 big players which I want to be my customer, I covered 10. Five are taking me time. And you
Uh-huh.
already serving them five. I'll buy you and I complete the whole market segment coverage for
Yeah.
100%. And the fourth is the asset. What kind of asset I have, which my acquirer or the buyer would say, well, this is a great complementary asset. It's going to take me the R&D and D and all that, a lot of time. I don't have time. I have money. So let me put the money and buy these assets.
Yeah.
And sometimes it's geography access and so on
Okay.
and so forth. Now, so that's one part. Second part is how do you prepare yourself? So you first have to, as a business coach, I focus a lot on clarity as a basic foundational step as to
Okay.
why you're doing what you're doing.
Yeah.
So why do you want to sell? Because you wanted your son or daughter to take it over and they're not ready. So you want to exit now, or you are getting old, or you just want to
Uh-huh.
get in cash and travel with your family all over the world, or you want to start another company or a foundation. So be clear why you want. So if you want to maximize your money, then you want to look at my exit strategies to maximize the money I get by sell. Right?
Yeah.
That's simple, and probably many people do that. There are other people who say that, and we come across one of the clients. He said, I want to exit because I'm done with my life stage of running a
Yeah.
company. But I want to make sure my first criteria that my people need to be taken care of. So I'm
Uh-huh.
looking for a company which is going to buy respect and continue to all the good things in my culture and add the good thing they have in that.
Uh-huh.
There was a Midwest company we were consulting because a large company from Asia bought them, and they're focusing so much on performance oriented culture. People were very unhappy with that, and we were brought in to do the cultural integration for them. So clarity is the first step where we say, be clear as to why you're selling. What do you want out of that exit? And
Uh-huh.
then accordingly, you look in the market as to what kind of similar transactions happened in past in your industry and who are your ideal prospective buyers. Make a list of those, even
Okay.
25 of them. Study which one of those desire, what made those deal become successful.
Okay.
And then now you have a criteria coming out of that saying that why these companies bought my kind of companies in my space, my
Yeah.
competitors. And then
Yeah.
you look at your current standing on that criteria. Where do you stand?
Yeah.
And then you will see there are some gaps. And then you try to work towards that. So give yourself, I would say, ideally 3 years, if not, at least 18 months to prepare your company and position it around such that when the investors, VCs, PEs, or prospective buyer, corp development guys are going to look at you, they love the metrics they see.
Yeah. How, this is the thing I run into when I'm working with these folks, is that it's sometimes tough to tell which option is going to be best for the company. Like, given a existing company with an existing leadership team and talent and product set and client base, how do you sort of look at that or assess which of those potential outcomes, which of those exit strategies might be more or less possible? Like, are you looking at the client base and saying, oh, well, you really have a unique client base, maybe we should steer towards that one? Or, hey, you've got some really unique capabilities that we can probably find a market for. Like, how do you assess which exit strategy might be possible for a given situation?
Excellent question. So I would say the first step, again, I said, what were your primary reasons to exit? If
Mm-hmm.
your reason primarily was to maximizing value, then you will go out in the market and see what has been the valuation of the asset,
Okay.
similar asset you have has been in the past. So today the market is looking for more of assets, of technology asset or whatever you have created that is more in demand in your industry, or is it the people, the skills
Yeah.
of
Okay.
people that is more in demand, and which one is giving to you higher valuation?
Yeah.
Then you go to the companies who have bought similar kind of companies in past and look at, are they still looking for that? So
Uh-huh.
one such live case I can share quickly is that in Bay Area, this company market Microsoft system integrator,
Uh-huh.
probably 300 people,
Uh-huh.
and there were two partners. So one of them wanted to uh, just retire. He said, I want
Yeah.
my, and this guy said, okay, then I can run it alone. So let's exit. And they called me saying that, can you help us to sell? I said,
Mm-hmm.
I can, but before that, why are you exiting? What do you want out of this? He said, nothing, maximum money out of this. I said, then I went to the whole
Mm-hmm.
criteria. We set up the criteria. And they said, who are, then now with, based on that, we said, who are the ideal buyers? Right now, in next 1 year time, if this deal happens, what is the need of this industry? And it came out very clearly that a lot of deals happen in this area for people. And
Mm-hmm.
who is buying that? So Accenture,
Mm-hmm.
Deloitte, and similar ones. Who
Yeah.
gave higher premium? Accenture. That go and study every possible deal Accenture did,
Yeah.
and then come out with that criteria, apply that to your business, check out where you stand, and then position around that. And they were short of some 25 people for that golden number of X number of people with that skill. They said, go ahead and hire those people.
Yeah.
And now they're sudden the optics is fantastic to Accenture buyers.
Yeah.
They did the deal within 5 to 6 months time.
Yeah. 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 It's the power of having a target and a strategy and knowing what they want and then meeting those criteria. Because otherwise, I mean, companies like you're trying to do everything, right? You're growing the client base, you're growing your capabilities, you're improving your margin, right? But not all of those are going to go into the valuation calculation. So
Absolutely.
yeah, yeah. In terms of when you first start working with companies, are there any kind of just standard things like fundamental things that you're looking at in terms of kind of being ready to sell, being ready to exit? Like what are things that you're looking at kind of primarily?
Yeah, very good question. We do come across. I did come across a very recent case where they said we want to exit. Two of them are technocrats, AI product, robotic product, excellent product. Customers, limited customer, but they love them. The scope to grow, and I I did then kind of my coaching way of in a coaching way, I asked them some questions as to why do you want to exit,
Uh-huh.
and they said, well, we're stuck in this market segment. New market segment means we have to repurpose our product, a lot of work. We're not getting younger. We did this for now last 5 years now, and my other partner is saying that enough. We have enough money. Even if we get $1 million each, we'll be okay. I said, fine, if that's what you
Uh-huh.
want. That's fine. But are you looking at what you created here?
Yeah.
You have AI powered robots which you are using for a particular industry segment for a particular use case. Very quickly, you can repurpose that role for something for the healthcare industry
Uh-huh.
or something else. And yeah, it's doable. So then what is the real reason? Do you really want to exit, or you want to get some cash out, or you want to take
Yeah.
off the load of growth, which is the demand was now, because having team of 3 to 30 was fun, excitement, startup. Wow,
Yeah.
I'm creating something new. From
Yeah.
30 to 300, now I want to learn delegation. I want to do prioritization,
Yeah.
banks, cash flow, legal issues, PR, how to look and evaluate PR guy, legal attorney, all that. And from 300 going forward, it's huge different challenge.
Yeah.
You need to grow faster than your company is growing.
Uh-huh.
The company is growing in terms of numbers, but you have to grow as an entrepreneur, as
Yeah.
a leader.
Yeah.
So then we looked at business, and then there was an opportunity to segment part of the business, separate out a couple of assets, bundle them, and spin it off, and then
Okay.
give it to somebody else, which they don't want to run, and they went down to the new areas. In fact, yesterday itself, they texted me saying that they have a term sheet with one company, and they loved that. So they are off. That load is off from their plate, and they are now doing
Yeah.
something which they wanted to. So they really weren't looking for exit as such. I'll drill down to why they want to exit. Was they really want to not do that part of the business?
Uh-huh.
but so they are now happy. They're getting good money, good cash, and still continuing with the newer area of segmentation where they want to go and got rid of the stagnated market.
Yeah, yeah. Um, I'm curious, what are, as you get into the, closer to conversation with the potential buyer, getting term sheets back and forth and stuff, what are some common kind of challenges or pitfalls that companies run into that, if they would have thought about it, 2, 3, 4, 5 years before might have saved them some pain? I mean, what do you see any common challenges in terms of actually making deals or getting, either good valuations or de-risking deals that people could think about sooner?
Sure. So, uh, there are obvious reasons and there are
Hmm.
not so obvious reasons.
Yeah,
So, obvious reasons, you ask any of the Gen AI like ChatGPT, Gemini, you will get
yeah,
that. Or your financials have to be
yeah,
clean,
exactly.
your losses all settled down, your
Yeah,
debt to equity ratio, all of those
yeah,
parameters. So, legal due diligence, you can look at the criteria and you make sure that you're there. The financial criteria, the position in the market. If you're a BBB member, make sure that the responses are there,
yeah,
complaints are reduced or minimized, all of that.
yeah.
So, what is not very obvious comes to the kind of culture you have created in the organization.
Okay,
When potential buyer investors are talking to you, you you choose your buyers also carefully.
okay. Yeah, tell
Don't
me
be
more about that.
desperate. Say it again.
Tell me more about that. Like when you say you want to choose your buyer carefully, like how are you choosing?
Right. Sure. So based on your reason, if you're looking for maximum valuation, then you want to look for somebody who's cash rich and desperate to quickly grow their business by acquiring what
Yeah,
they need, which you have and they don't have.
yeah,
So then money is a criteria. They are in hurry and they are going to look at it very clearly only in the monetary terms. Then you show your financial to be strong. And
okay,
when you go and interact with them, you first earn their trust. So you study them very well, the organization, their history, the key people involved. Um, Look at their LinkedIn. Today, fortunately, we have all that data available. You can take that LinkedIn data, run it through Gen AI and see what kind of, if this is the profile of this person, LinkedIn or Facebook or Instagram, what are his
mm,
likes, dislikes, how would he like me, what kind of people he would like to deal with, right?
interesting.
You
Yeah,
don't change what you are, but you try to say what kind of, starting from what kind of greetings you will start with, what kind of clothing you will do, what kind of setting environment you want to meet at Starbucks or you want to meet at office or
uh-huh.
one of the shared we work kind of shared places.
Yeah,
So all those things matter to create first impression. And when you meet them, make it all about them, not about you. Start
hmm,
the conversation first time is ask them questions which show genuine curiosity and
yeah,
saying that I'm here not to sell you. I'm here to see if there's a match.
yeah,
Do I have something which you want to buy?
hmm,
That is going to give you a maximum credibility, trust, and therefore the valuation and a very smooth transaction.
yeah, yeah, yeah. It's interesting. I always say that valuation is what one company is willing to pay at one point in time, right? So you have to understand what it doesn't matter what you think you're worth. It matters what they think you're worth. And sometimes that can be a lot more than you think, right? Like
It
you
is.
don't realize that they're under, they've got to do a deal or they got money to spend because of their board or they know that they're going to be competitive pressure because they're competition. And so, sometimes the valuation can be really different than what you understand because you don't understand their metrics and their situation. And so, asking those questions and getting that understanding can be huge for valuation purposes. Now,
Absolutely.
let's talk
What?
it.
Yeah.
Let's talk a little bit about the buy side because you mentioned that you deal not just with the sell side but the buy side. When working with buyers, how do you help them figure out like what they want to be acquiring when with the understanding what their needs are, where their gaps are, what their plans are, and helping them kind of figure out, okay, well, these are potential acquisitions you should be looking for in these kind of areas and these kind of capabilities. Like, tell me a little bit about the buy side there.
Sure. So, buy size typically the corruptive function. They for large organizations, if that's the case, or if it is existing mid-sized company and acquiring other mid-sized company, then
Uh-huh.
we always start with saying that similar model. Really, why are you buying it? Why do you want to buy it?
Hmm.
First, buy or make is the decision we try to say. Okay, I want to buy this company because there are 50 people in AI.
Hmm.
Okay, what is the average salary? How long it take for hiring these people? How much revenue loss will happen if you do it by yourself and versus acquiring? So that's one single benchmark for you to see whether I should make it myself or
Hmm.
buy it from the market, right? That's one
Yeah.
thing. The second one is once you're clear about Yes, I want to go and buy it. I don't have time. I have cash.
Hmm.
And then set down the criteria as to why I'm buying for the people or for the assets, for capability, for geography access, market access, and so on and so forth. Once done that, then you typically, there are many boutique shops whom you can hire to do a search, but not so many when it comes to the $10 million
Okay.
deal size. Um, so, in fact, interestingly, one of our clients, and I'm their advisor as well, is GrowthPal, growthpal.com. They are in US and also in India, and they have entire universe of the small businesses and startups. You give them the criteria, they run with AI, and within a week, they come out with the 4 or 5 shortlisted companies, and then they start conversation. So you have your criteria as to why you're buying, and don't necessarily have to reveal your all cards to begin
Yeah.
with. Go and talk to them, and then based on what is that is most important for you, look at all those when and then categorize them. But if it's the reasons like people or even asset or market access, it's always better to ensure that the people, the key people there are going to stay with you, and they'll not stay with you just because money or
Yeah.
because there's a contract. For
Yeah.
those reasons, if somebody's saying they're going to be mercenaries, they're not really going to
Hmm.
add great value to you,
Yeah.
and you will lose the money you invest into that acquisition. So look for the cultural alignment. If possible, talk to those people, uh, get to know them, and understand how much is the cultural difference between that organization and your organization. If there are gaps, find out ways to merge that. Is there too much of cultural gap? Think again if this is the best company to go and acquire. We
So
have
how?
seen major failure happen in the industry is primarily for cultural differences.
Yeah, I totally agree. And I was going to kind of go down this path of, how do you assess companies and how do you assess culture? Like, I get it. I agree. Like, it needs to be a fit. But so, I mean, it's kind of a two-part question. One, this is just hard in general. Like, assessing cultural fit is just a complicated thing. And also, you're dealing with a transaction process that can be very limited interaction. I mean, a lot of times, these transactions are basically done with not much of the company actually knowing what's going on until either very late in the stage or post deal. So how, as a buyer, given limited access to some of these things, how do you really assess these things effectively?
Yeah, very valid question. Absolutely. So the first part is that there are tools to measure organizational culture, but when you are started dialogue with say 2 or 3 potential companies, you may not have access to conduct that cultural due diligence. If they allow
Yeah.
you, great. Then you hire the cultural experts who do the assessment quickly and give you a map of where they are, what kind of culture they have, and what kind
Okay.
of culture you have, and how much is the gap. And they'll recommend you as to how much is required to kind of bridge the gap.
Yeah.
We do that as well. We do more on cross-border intercultural space.
Okay.
It's a bank company in China or Africa or Mexico, US, India, all that. And if you don't have access, then we have developed our own methodology. We are hired by one of the large investment banks to do that. They had shortlisted 3 mid-sized IT services companies, and
Okay.
we don't have access. We want to be very discretionary. So there are ways and methodologies to look at the key leaders. Today, most of the information is available. Other people,
Okay.
people speak a lot. You will see their social media profile, what they commented on different posts, their own
Got it.
posts, what the articles they wrote, presentation, conferences, everything. You can really collect all of their data, and um, you need to have cultural experts who will read through that and kind of infer with a fairly good confidence that what kind of culture, what kind of person this is, what
Hmm.
kind of leadership they have, how long they have with the company, how are they working with each other well and not well. You can talk to the employees who have recently resigned, make sure that the confidentiality agreement of is not spoiled, and then talk to and interview them. So very discreetly, you can do a bit of research and define the cultural profile and your cultural profile and see the gap between that and be prepared to mitigate that very early in the after the transaction. You conduct certain programs on both the sides for key people to help them understand each other and work in harmony, align towards common direction.
Yeah. Yeah. Um, Tell me a little bit more when you're working with the buy side. How do you go about sort of making the market? I mean, you mentioned that there's a couple of tools or services and stuff out there, but so you come up with a profile, you come up with a need set, right? Like this is where you are currently as a company. here are some areas that you could expand, or you could use acquisition as a strategy for getting either capabilities or geographic focus or client bases. How do you actually go out and find these companies? I mean, there's so many companies out there that that are, there's the companies that are putting themselves on the market, but then there are all the companies that are not putting themselves on the market but are potential that might be interested. So it's like hiring people. It's like a lot of times I don't want to hire the people that are on the job boards. I want to hire the people that are currently working. So how do you actually make a market for some of these things?
Sure. Excellent question. Actually, you reminded me of two of the interesting case studies, success stories we had. So one of the, and he's my close friend. So he wanted to start a BPO company, and it was going to take a while from a scratch. This is a little old, kind of 10 years ago. Um, and his business model was very simple. I look at the BPO company with operation to be run from a low cost country. So right itself, the business model is successful. The moment I can implement it, the current cost in US is X. I'm going to do it at 0.4X, right? With management overhead and not everything which can be done in US is taken to the India, all that. So you might do it, let's say 0.5X, even 0.46. A 40% margin from the first year one.
That's nice.
Yeah. Now, who's going to buy him? So what he did, he literally went and looked at the entire list of BPO companies, but he started from the bottom up, smaller ones.
Okay.
And what he did, he looked at the profile of the owners.
Okay.
He found people who are older and have no succession plan.
Yeah.
And he wrote to them and he studied them and he approached them saying that I'm here to ensure that your employees, your company, your legacy continues. If you want, I'll continue the same name. Tell me what you want. Come to my place. Come to my place in India. See this. Meet my family. See the location where our people will, and how we'll transition your existing employees. They'll not lose jobs. This is our strategy to get more market. Use them for knowledge transfer. Let them do some other kind of. We'll reskill them. And here is how the money will work around when we get new customer. When we save money by doing this work, and with it, and that guy was 72 years old.
Yeah.
He was concerned about his people because his people were his family. He had no children.
Yeah.
And the deal happened, and that grew up he rapidly grew from 200 people, I think, to 1,000. And then he exited. One of the large BPO company bought them for a great valuation.
Yeah. Yeah. That's great. Good story. You've mentioned a couple of times this cross-border, cross-cultural kind of acquisition stuff. I'm curious because I think we end up being so kind of U.S. centric when we look at entrepreneurship and kind of growing companies, and it's I think it's just kind of in the American DNA to kind of, this is this amazing thing. It's the everyone kind of aspires to be a business owner and be an entrepreneur. How is that true or not true in other countries, and how, like, what have you noticed in terms of how other cultures in other countries think about this process, whether it's just the nature of being a business owner or the actual acquisition process or company culture, right? Are there big differences that you have found working in some of these other countries?
Sure. Yes. The answer definitely yes. So, U.S. Constitution itself was, I think, designed for commercial success. And my view is that the pursuit of happiness is one of the fundamental rights. You probably won't see that in any other constitution.
Yeah.
So when I came from Europe to US, a lot of business meetings, I'll say, hey, I just came from, where were you before? So what are the difference you see between UK and US? So I said, see, for UK, it's so much focused on civilization. All I did over the weekend was see pamphlets to go and see this festival in this castle, that castle, so much talk about Queen. And in US, it's all about this new startup, this new company, this stock market.
Yeah.
We talk about new business idea.
Yeah.
Right. So the whole culture is geared up in the US for commercial success, financially independent, excellent individualism. Right.
Yeah.
If you look at Asian cultures like China, India, Japan, it's not that. In fact, when I grew up in 80s and 90s in India, profit was seen as a bad word.
Yeah. Yeah.
Becoming
exactly.
rich was supposed to be a bad thing because rich means you are exploiting poor people. And typically the Bollywood and some of the movies in Hollywood also kind of portray that. If you're rich means you've done something wrong to go there and to become rich. So there are cultural differences a lot, but things are changing a lot. The emerging markets have the governments have realized that the ecosystem for startup has to be created very well. So you see the number of new billionaires are rising at a faster rate than in China and India. The unicorns, the startups with $1 billion valuation, you will see the numbers are very phenomenally high in India, China, and that's happening in Europe. Not as much, but they're trying. But China, India,
Hmm.
definitely on the top of the list for the startup ecosystems. They're
Yeah.
creating they're doing their stock market also with a separate exchange where smaller companies, startups can also now trade, be listed. So there are huge gaps there in the culture remains different, but the driving parameters for business is essentially, revenue growth, profitability, and potential to grow. That is common at both the places. So the
Yeah.
top leaders try to understand these different cultures and align themselves. So when Pizza Hut went to India, they have chicken tikka, aloo tikka, the potato tikki, those kind
Hmm.
of toppings there for the pizza. And there's a huge longer list of flavors because India is full of spices, right?
Yeah. Yeah.
And Pizza Hut is actually premium restaurant in many cities in India.
That's
For us,
interesting.
it's not, right?
Yeah.
But so you culturally align there, but probably a Pizza Hut location, particularly in India, might be more profitable than US. Pretty good
Uh-huh.
chance.
Yeah. How if I'm a founder, have a reasonably successful company looking for an exit, I guess how much I guess what's the international market look like these days? Like, should I be looking internationally for potential people to acquire me, or am I still looking primarily in the U.S. for people to acquire?
Excellent question. So, Bruce, based on which industry you are,
Hmm.
um, you you would probably benefit looking at international buyers, and the
Okay.
reason is that US is extremely matured market.
Yeah.
Yeah, you take any product and services, it's a very difficult to be unique, pioneer, innovative for too long. Somebody will come up with either copycats or somebody will come with a better, smarter model than you. And
Yeah.
the technology challenge, US has exactly been always been on the forefront of newer business model, using technology, using the model itself like Uber and Zomato and all of that. So if you go outside, there are many companies who want to have access to the US market.
Yeah.
You
Yeah.
could they continue to enter the US market. So this is another client of mine, IT services industry, and they hired. I said I helped them to a point. After that, I said you need to go for a business broker now,
Hmm.
and they looked at India. So I said, why do you restrict? Go all other countries. So they went extended their search and they found one very kind of boutique shop, and he said Japanese companies are giving a lot more valuation to the US companies because they want to enter here. They are new generation. They want to even understand the US market, US business culture. So they were small. So 2 million, 3 million didn't
Yeah.
really
Okay.
matter for that company. And that deal
Yeah.
happened very quickly and they got highest valuation compared to what they were getting in the US.
Yeah.
So go internationally for sure.
Interesting. And tell me a little bit about timing. I mean, but whether it's where the company is, either in terms of size or maturity or just timing of the market, like how do you kind of help companies figure out, or what's your philosophy or strategy around helping figure out when they should sell? Like, is there windows or kind of criteria that you're looking at when a company is ready to actually be sold?
So, so we're talking about owner or a group of two, three people own companies. If you look
Yeah.
at that, then those are pretty much your personal reasons in
Okay.
your life cycle where you are and when you want to exit. You're done enough and you want to kind of not do the same thing anymore.
Hmm.
That is primarily, if that is the reason, then you plan in advance at least 3 years, if not, then 18
Yeah.
months.
Yeah.
Minimum 18 months. But if as a company you are kind of as an investor, group of investors and the board, all that you're looking at exiting, then you I go back to saying that why are you exiting? If you want cash, what are you going to do with that cash? Is that plan ready first?
Got it.
Work backwards from there, right? When do you need that money? What is your plan to invest that money into what for?
Yeah.
Then work backwards for that. And then uh, timing wise, you again look at the industry parameters. if right now there is not so much of new deals happening and the demand for your products or people, if you have services, is not that high, then you might want to lie low a little bit. Look at the economic cycle, look at the your industry's alpha with respect to the economic cycle, because some industries lag behind, some are ahead, kind of thing. So you look at
Yeah.
when is your industry going to get valuation for the reason for which you are exiting, which is your asset. So if you're selling for assets, if you're selling
Yeah.
for people or all that, then you work around that and then see when you can optimize or maximize your returns and then choose the timing.
Yeah.
But if you want to, so with exiting, should sooner you start thinking about and planning for that, better it is.
Yeah.
So it could be like you've done everything all right, and you then wait for the right moment, and you can wait for 6 months, 18, or even 1 year,
Yeah.
but wait for the right time, and then you get very efficient, quick, maximum deal in your favor.
Yeah. And how, I guess, how as an owner, how would I kind of gather some of that information about, what's happening in the market, what's been sold recently, maybe what some of these valuations are, like what people are buying, why are they buying them? Like, how do you get access to this as an owner?
There are quite a few websites. They are now tracking this.
Yeah.
There are plenty of, at least 5 to 6 of them I know. There are newsletters, there are publications, but they will they will publish what is not confidential. They'll publish what is generally available there in the public domain.
Yeah.
You need to go and attend the conferences, seminars. Smaller the one, better it is. Go and meet people. They attend those. Try to get speaking engagement if you can. Talk to 10 different business brokers from all over the place, global, within the US. Because when you talk to people and ask right questions, then you get the real data.
Yeah.
Why something is happening, when it comes to the news, what comes to the news probably is half truth, or only it is reporting only half of the data. What really happened behind that could be very different, and they're positioning it that way for the public interest and for their reputation.
Yeah. Yeah.
It's very important to understand what's happening, which is not going to be published. So you got to go attend conferences, seminars. Today, with the whole LinkedIn kind of medias, you can be invited to many webinars, seminars, and you'll find out the right people there. So there's a M&A seminar. Somebody's talking about how I help my clients to sell faster. You see the chat, people are asking questions. There could be a buyer. You can smell the serious buyer based on the way he asking question. Take down the guy's name, search on the net, go to that. Every day, I can guarantee I can get you 10 names like that by just sitting at my computer.
Yeah.
And go and reach out to them, genuinely interested into trying to do something good for them and you.
Yeah. Yeah. Suren, this has been great. If people want to find out more information about you, about the work that you're doing, what's the best way to get that?
I think our website is the best way. It's aptculture.com. Apt as in APT, appropriate, APT and culture, aptculture, one word.com. And my email is my first name, SUREN @aptculture.com.
That's great. I'll make sure all that information in the show notes. It's been an absolute pleasure. Thank you so much for taking the time today.
Same here. Thank you for inviting me.